Before I go too far into this, I would like to just take a moment to introduce myself. A small amount of background. I've been dealing with identity in one form or another for most of my career. Started with military battlefield identity scenarios through to such diverse things as aircraft identity, Formula One car identity, a fair chunk of time at a public trust PKI provider, and then into Ubisecure as CEO. Ubisecure, we are a mature CIM provider dealing with external identities, been operating since 2002. Today we deal with a number of governments, providing various parts of citizen infrastructure and a number of large enterprise and other customers as well. We have a second part to the organization, Rapid LEI, which deals with LEI issuance. You heard earlier from Tom Skinner around the role of the LOU in terms of issuing legal entity identifiers. Ubisecure was accredited in 2018, May, as an LOU, and we've been issuing since then. Today, we are the world #1 issuer, so 1 in 5 new LEIs that are issued by Rapid LEI. And we deliver that through a network of resellers, but it's based around automation and API first integration. So that's how we've achieved that scale. We also heard from Tom the importance of data quality, and again, we absolutely agree on that. Issuing a high quantity is nothing if the quality cannot be preserved. Unfortunately, among our peers, we're also the #1 data quality ranked as well. So we're very proud of what we've achieved with the LEI issuance, and I will tie that back in as we go through this presentation and move forwards. So I'd like to look first concerning 2 different classes of identity. One of the things that sets Ubisecure apart is the embracement of different classes of identity. We see individuals, and you can consider these as the standard identity. They've been, every time we talk about identity, we normally end up talking about individual identity, people, natural persons. And it is the standard identity in various transactions. What we see with an individual's identity, and we've heard various aspects of this today already, we see variable strength authentication. How sure can we be that it's the same identity coming back again? And today we talk about multi-factor authentication, passwordless authentication, various techniques to ensure that that can be kept at a strong level of authentication. We also then have the assurance. So once we know it's the same entity back again, how well do we really understand that entity, that natural person? And you've heard a number of the previous presenters talk about challenges with identity fraud, where people are claiming to be somebody else, but also different techniques of dealing with that as well. So, for example, Dan earlier raised the concept of using multiple assurance points. So pulling information from different social networks, different areas and so on, that then link together to give a much more composite view of that individual and a lot higher assurance around that. The other vector to consider with individual identity is that we often think of this as it is by its very nature an active identity. Individuals take actions, and that identity is there to enable that action or that interaction, the transaction that occurs from that. So that's a typical classification of an individual identity. We also at Ubisecure recognize organization identity. Now, often this will be a hidden identity. We're seeing it becoming more and more exposed now. We see, just like individuals, an organization can have various strengths of assurance. So we've already spoken about LEIs providing a highly assured organizational identity record, but there are lower assurance views as well. Interesting question: can organizations authenticate if they're an identity? Presumably there should be some authentication of that identity. Potentially EIDAS points us to an answer to that, and which says both yes and no in terms of that answer. So if we think about e-signatures, and we saw Evan's demo earlier, in terms of generating the identity required to perform an EIDAS compliant e-signature as a trusted provider, an e-signature is only available to a natural person. because the signature itself shows an intent to proceed, an intent to transact, and that's part of the definition of an e-signature. An e-seal is available to an organization, and the e-seal gives a statement of identity, but not a statement of ability to transact. However, that e-seal in itself is typically derived from a PKI infrastructure, and from that you can authenticate that organization. So you can use that to determine from the trust hierarchy you get from the underlying certificate behind that seal, that organization is who they claim to be. And as we see as we go forwards, there are now ways in which the broader LEI style information can be pulled into that as well. More importantly, when we look at organization identity, we see that they are actually key to many automated transactions. If I just take a very simple example, we're in the run-up to Christmas now. If you think about the last transactions you've been performing recently, maybe it's with Amazon to start your Christmas shopping. You as an individual would have connected onto their site. You would have looked at their website. They go through, Amazon goes through a fair amount of work technically and legally to make sure that they understand you. But how much do you really know that you're on the Amazon website? And of course, this is a typical fraud vector today. How do you know you're on the Amazon website? Well, there's circumstantial information. It looks like Amazon. There's your previous order history there. There may be your recently browsed items. There's enough information for you to be able to determine that that probably is the right organization that you want to deal with. If you now consider that problem in a business-to-business scenario where you've got an organization trying to interact with an organization, how do you achieve that on that basis? Today, that's through contractual definitions. It's through administrative controls, potentially a paperwork trail. Maybe it is eIDAS compliant e-signatures that sign documents, but there's still an audited trail behind that. So you're not running technical controls, you're running administrative controls over that process. And that's something that we believe there's a potential to make a big difference in terms of changing how business occurs online. But to be able to do that, we need a trust anchor that can be used to allow and enable that transaction to take place. So I think it's important to understand what is a trust anchor. A trust anchor, if we take a Wikipedia definition, it's an authoritative entity for which trust is assumed and not derived. So it's the foundation point, it's the root point for that trust, but that also means it's the root point for the relationship, the transaction, what's going to proceed from that point. Now that can be an emotive point. It doesn't have to be based on anything beyond a personal trust point. That's not a particularly high assured trust anchor. But we also have legal trust anchors. We have technical trust anchors. There is an RFC dedicated to trust anchors in a public key infrastructure context. If you're having trouble sleeping, that's a great read to assist you with that challenge. So trust anchors are this foundation point for that relationship. If we look at examples today that you can find of trust anchors, the most obvious one, the most commonly used, is in your browser, and that's the SSL certificate that you use to ensure you have a secure transaction. That's actually what that RFC refers to in terms of the trust anchor side. But we use those every day, probably without awareness, more and more so now without awareness, now that we see changes in the browser ecosystem, removing the EV green bar that we were just about getting used to before that started vanishing. But that's not the only place. Your car, more and more often, will start introducing trust anchors. The automotive manufacturers are keen to make sure that it is your engine control unit that's speaking to your gearbox control unit, or more importantly, to the camera control unit that takes care of your self-driving capability. So there are trust anchors within your car as an ecosystem as well. Your lawyer could be a typical trust anchor, and importantly, in the context of today, your bank, or as the bank, you can be and you are already a trust anchor in this scenario. The value of those trust anchors is the simplification of the automation of interactions. That's what that trust anchor brings. So let's look a little bit more into trust anchors themselves and the ecosystems in which they exist. So generally speaking, we see two levels of ecosystem for trust anchors. Very simply, closed ecosystems and open ecosystems. If we look at close first, this is where you've got a defined, possibly self-constrained group collection ecosystem of identity sitting in there. A common example for this could be a large organization's ERP platform for that ecosystem. In there, you'll have organizations, you'll have contact points, and from that definition, by being included into that ERP system for whatever reason, you can have access to various capabilities from that, and that is the root of trust for that system. Those entities could potentially interact. They'll certainly interact with the entity that put them in there, and that's a fairly common example of that. We have other closed systems, for example, the KYC processes that banks run today, generating internally accessible only sets of data that understand relationships, information around various entities. And then we have open ecosystems. Open ecosystems, by their very definition, are broader, more useful. Sometimes there is a lower bar of entry, but more often than not, there's actually quite a high bar of entry. And if we just take a couple of examples of two of those specifically. I've already mentioned public trust certificates, and I hope this is showing up on the quality of the screen share. But certificates are the de facto open ecosystem trust anchor that's out there today. The clues in the name, it's a public trust scenario. So you have a number of CAs who go through various hurdles to make sure that they are assured each year that they can continue to issuance and give the guarantees and generate that self-defined trust around that root certificate, and then deliver that forward to the various customers who take derived trust from that and use that to protect their customers by trust on the website. A classic example. But we now have a second great example of that, of an open ecosystem, which is the entire set of issued LEIs. That's referred to as the GLICE, Global Legal Entity Identifier System, and it is the complete set of all issued LEIs that exist today. As you've already heard, an LEI provides a highly assured record for an organization identity. You can see Ubisecure's Finnish entity there with its information defined. This is a publicly available record, and the reference number that you get, the LEI itself, gives you a key into that information set and provides a publicly accessible root of trust around the definition of that organization. So those are trust anchors which exist today and are in commonplace. What's the value of these trust anchors? What does that give us as a ability if we use those? I want to talk through a case study from Finland. So again, it's another tax scenario. I guess Benjamin Franklin was right when he said nothing's certain apart from death and taxes. So I'm not going to apologise for this being the second tax example you've had today in these sessions. It works well. I think it's well understood by people as a need that we have to go through. Here I'm looking at corporate tax or organisation tax rather than individual tax, which we spoke about earlier. And as an organisation, when you have tax, you have to deal with typically three types of tax: corporate tax, sales tax, and payroll tax. In Finland, like everywhere else, tax is complex. There's a lot to be done. There's a lot of submission information required, a lot of tracking information that's required. A fair amount for individuals, although, as we saw earlier, that can be handled by the organisations on their behalf, but a lot by the organisations. And of course, if the organisations are handling the individual submission data, they've got even more work to do because they've got to handle the admissions, all the individuals, plus their own corporate level tax returns as well. So this complex tax environment gives rise to multiple contact points per organisation. And these multiple contact points could be inside the main organisation itself, or they could be external entities as well. Think about outsourced payroll providers, for example. That level of contact points, that level of distribution of the process leads to significant management overheads, both in terms of executing the process, but more from the tax office's view of managing everything that's required to enable that submission to happen. So this was recognised by the Finnish government. In 2006, the government set out to address this. 2008, the Katso platform was deployed. The Katso platform defines what we would now call a closed ecosystem of trust anchors. It links together a number of the government services, or it has linked together a number of the government services. The tax office being one of the key users of that, and continuing to use that today and as we go forwards. So this system gives self-service capabilities, and again, there's nothing unusual in self-service capabilities. We all expect that everywhere now. Importantly, it gives the ability to delegate the rights associated with those with the actions that are required, and those rights are delegated through the trust anchors that exist within that closed ecosystem. So it's probably easiest to explain this by actually walking you through how this works. In Finland, when you create a company, you do that online. You go to the company's registry, PRH. You create your company, you get email notification of the company creation, and the company's registry notifies the tax office of that setup. The tax office reaches out to you as chairman or CEO or whoever the defined contact point is, and provides you the information that you need to manage the tax affairs for the organization. Now, as a CEO, you won't be handling that directly yourself. You'll have a CFO or an accounts team who take care of that. So you will go into that platform. You will delegate the rights to submit and the responsibility to submit to your CFO. They will be invited to the platform. They will accept that delegation, and then they receive those rights and responsibilities. The CFO potentially might have a team of 3 people, 1 for each of the tax types, and will invite them and delegate those rights split by the particular type that they're responsible for to process those. If we think about payroll and assume an outsourced provider, then the employee handling payroll will now delegate to the external organization who is the payroll provider. That organization will receive the delegation, it will accept that, and then delegate it internally to the appropriate accountant or bookkeeper or whoever is managing that process inside that external organization. The critical part through all of that is the tax office did nothing other than send out the initiating top-level email to the contact point for the organization. Everything else was handled externally by the people who knew the parties and knew what was happening within that. All of those parties were automatically invited into that ecosystem based on the original trust anchor formed when the company was created between the chairman, the CEO, the person creating the company, and the company record itself, essentially managed by the business registry. So that trust anchor was created, and now it's been used to delegate that right for tax submission all the way through. So with that in place, what were the benefits that were received from deploying that system? The great thing about the Finnish government, along with a number of other Nordic and Baltic governments, is they publish almost all of the stats around all the services that they provide. So these items that we have here are all public record numbers that you can pull from the various archives on the government performance in Finland. So the benefits of deploying this and utilizing those trust anchors in that tax environment, the number of physical service points were reduced, a significant reduction in those service points because they'd eliminated that contact point with the customers, and they could let customers self-manage and self-delegate through the system. A 20% year-on-year staff reduction cost as a result of that. The third area is a significant increase in service usage. Now, for a government with citizens, service usage may not be a business growth metric, but for any corporation, increasing your service usage is a significant part of your growth metrics, and delivering sticky services with increased usage is always a target and always an aim to grow that. The combined effect of all of these coming together is that bringing in this delegation platform, using that trust anchor that's formed when that company is created, linked to that key individual, resulted in a 99% reduction in transaction cost. So transactions that in 2008 were costing 30 euros per transaction, and now in 2018, was when the last measured data we can access from, were costing 20 euro cents. So that's the reduction through the introduction of that system based on trust anchors and the associated savings that run from that digital transformation system based on trust anchors. That's the value. Essentially, the technical control of rights delegated through an ecosystem to achieve the automation of interactions in a simple way. That's the value of trust anchors. So I guess the next immediate question is, how does that apply in the banking scenario? I think it's worth introducing one more term before we go on. So we talk, Ubisecure talk a lot about representation governance. Representation governance is the ability, is the net ability of the trust anchors and the delegation mechanism, taking processes that were previously administrative control and providing technical control for them gives you representation governance. So representation governance in banking. If we look at trust anchors that exist, I don't know if we have anyone listening here from the Dutch Central Bank. They very much consider their gold stuck as their primary trust anchor, but I think that's a slightly different take on the trust anchor definition, although a similar one. We see that within the banking world, trust anchors exist already. Those trust anchors are formed from the AML, KYC data sets that sit there. Significant work is done, and we've heard today about a number of the efforts that are in place to improve the quality of the data, to prevent fraud, to make sure that this all sits in a usable way and delivers correct value to banking organizations. Those trust anchors exist. They're driven by those verified data sets. But if we look at what's there today, we see the usage of those data sets in regions, geographies, banks where they have chosen to do this. We get bank identity, which is generally there to serve the individual. So, if we look across the Nordics, we see great use of bank identity. If we look to the Baltics, we see good use of typically national ID as opposed to bank ID. But there are challenges, again, as we heard earlier, in terms of getting nation states to deliver the identity itself, providing the framework for that identity to exist in, and then looking to the large players, the banks, the telcos, healthcare, absolutely, as the people who actually manage the identity and provide a federated, brokered mechanism to pull them together at the national level seems to be very much the standard way to go. But if we look at what's there today, we see the results of the KYC and AML processes delivering that individual bank identity. To generate truly valuable trust anchors, we need to bring organization identity in that as well. And that can be pulled through from the legal entity identifier. So as we know, legal entity identifiers can be derived from the information that's needed to fulfill them is almost always captured as part of the KYC you'll perform on a business customer as a bank. AML is more legal checks as well as the individual and entity checks. KYC is the gates. Do you reach the certain bars of the threshold? I suspect that there's very little need to go into any of those in detail. They're I'm sure well understood within the audience here. So by bringing LEIs into play, we are able to look at bringing individual and organization identity together. And when you combine those, you come back to the framework that's required for a very effective technical control representation governance system that can be utilized within the banking environment. We've heard from Tom about the savings that can be achieved internally just through having a unified identifier within banking practices, the LEI, derived from the KYC data that exists. We see a number of banks already exposing that capability to their customers through Bank ID externally. Exposing that LEI as well and delivering high value representation governance services can move banks into another area where they can both derive internal benefit and external benefit from that. So what does all that mean going forwards? I would certainly urge any banking institutions listen to this to look at the trust anchors that you have within your organization together. They exist already. Exploring those is absolutely something that we would recommend. These are already formed in your business. We've seen from the McKinsey study how they can simplify processes within the organization. But we've also seen from the example from the Finnish Tax Authority how they can simplify and generate great efficiencies outside of the organization. And where there are efficiencies like that to be generated and to be reached, they can be monetized and used as well as an increased service to the customer base that exists. And we've mentioned the cost cutting already. Part of this requires the LEIs to be brought into that process as well. There are scenarios that can be based just off the individual identity, but really to get that true value, it's about that joint trust anchor that links the individual and the organization. You've already heard from Tom about the validation agent program. I'm not going to go into great detail on this. We have Stefan Wolf speaking after me, maybe after a short coffee break, about the various Glyph work that's going on at the moment, and I'm sure validation agent will feature very heavily in that. But as we've said already, the KYC data that exists already can create those LEIs, and the LEIs can unify the workflows. They can unify data pools within the organization, having that consistent reference number, that reference identity between all departments, all divisions, simplifies and streamlines operations. We've seen the ability to drive savings, and that's not just internal savings, that's external savings as well. And also the ability from the validation agent program to consolidate. You may already, as a banking institution, be looking to or already requiring LEIs to be issued for various items that you undertake. Consolidating those separate processes in itself brings significant value. So just as we get towards the end, what does that VA program look like in practice? As I said at the start, Ubisecure has the Rapid LEI brand, which is currently the global #1 issuer. We've achieved that through automation and API integration. We can assist any banking institution with adoption of the VA program. The APIs and the automation that we have means that not only can we provide a very fast setup for that, but we can also look to provide enhanced verification and checking of the information that's pushed through as well. We would never suggest that the KYC processes that any banking institution uses are in any way lacking, but there are slightly different definitions, and we already have the ability to ensure absolute data quality with direct integration to registries and so on to provide a secondary check potentially on the information that's there. But as I said, I'm sure you'll hear significantly more about this from Stefan shortly as well. So as I suspected, we've got to the end a few minutes ahead of time. So any questions at this point?